Always recording, always good.
Let's do
So I
that.
want to, yeah. So I want to connect with you, Nathan. We're talking about this with a couple of investors,
Yeah.
and we ran this in our class that we had just a few weeks ago, which we'll be rerunning in January 3rd, about this idea of bidding on performing and non-performing, what it entails, what goes into it, why do you use one or the other, and what are some of the pitfalls? So
Yeah.
I want to dive into it. Before we get there, though, how are things with you? What's going on with your world? How are notes? Are you seeing an influx recently? What are you seeing recently?
I've seen a bit of an influx. I'm talking with a few sellers who are talking about some big tapes coming through here in the next few weeks, which is interesting. It points to what we've been talking about for the last couple of years, where we're anticipating seeing a lot more coming available for us to purchase, which is kind of the good news, bad news. It's good for us, bad news for a lot of folks. But again, we're there to help, and hopefully we can help out a lot more people. So that's good. How about you? You've seen a lot more coming through?
Yeah, we're seeing a lot of mixture of both. Some funds send some things out, but we're also getting an influx of those people who joined us 2 weeks ago. Some seller finance people looking to sell seconds or seconds converted to first and stuff like that. And that led to more discussions, which we're finding out is really cool because these people are amazed at what we can do to solve their problem. And for me, that's the key here, because these people, we're helping them get rid of assets or refinance their situation into something they can actually make some money and go redo. So those who are watching us, again, we're great on feedback. Send us some assets so we can look, and we'll share with you some information, but know the fact that we need some data points to run our calculations.
Yeah, I spent I
think we lost your mic for a second. Did you mute? No. I don't know if we lost your mic or can you hear me okay?
Yeah, I can hear you.
Oh, there we are. We're back.
Okay. Yeah, I spent about an hour with a friend of ours here this last week with looking over a bunch of her assets she's got for sale. It's some good stuff. It just needs a little bit of tweaking before it can be something that we can look at purchasing.
Yeah.
But got her hooked up with a servicer so it can help sort out, at the very least, the pay history, because that was the number one thing. We couldn't actually tell what her unpaid balance was because she hadn't been recording it properly, which only because she doesn't know how else to do it. And so that's what we're here to do.
Sure.
Help people figure out how to do this. We will buy these loans. We just need them. We just need them the way we need them.
Yeah, and I think people are learning quickly what that means, right? The idea of what the loans are set up to be is important for us. And you know the fact that when the data points are in the right kind of setup, we can evaluate things much faster, and it helps us know what we need to do to move forward in the asset evaluation and what questions to ask. We did share a spreadsheet to kind of help get those data points from those seller finance people. But on the flip side, when we're evaluating these assets, we run different determinations to decide what we're going to bid on it. If it's performing and non-performing, it depends, right? So Nathan,
the answer that nobody likes to hear, but that's the truth. It does depend, and we need certain things to be able to make it work properly. But we're here to help. We're here to help figure that out for people.
And yes, Nathan's having some kind of video issue. We'll work through it, and hopefully everything will work out okay. But when we look at these kind of things, we want to make sure that we're valuing these assets correctly. We don't want to just win an asset. We want to make sure we bid and be successful with our offers. But that doesn't mean always winning an offer. It just means that we make a bid that makes sense to those people out there, to the seller, but also to ourselves. We don't want to be in a spot where we make an offer, the seller accepts it, and it doesn't make a good return for us.
Right.
So Nathan, when you get an asset, one of the first things you look at is what? What are some of the things you look at?
So I'll get a tape. There's a number of things that I look off right up off top of the, right when I first get it. One of the very first things I look at is location. There are certain states that just through experience, I've learned kind of the hard way that they're difficult to deal in. So I skip over certain states. One of the other key things that I look at that kind of goes along with our discussion here today is I'm looking at last date paid and next date due. I want to know what the pay history is going into this loan to see where it's at. How likely is it to start reperforming, or is it performing already? And just so I have the story of where is it today, so I can know where to take it next.
Yeah. And I think that's important for most people who don't get what we're looking for. When an asset's performing, you have to make sure that you know the fact that how many payments are left, what numbers go into it, because you can't bid strictly based on certain data points. If you're bidding on a note, right? You're bidding on the term, you're bidding on the rate, you're bidding on a IOU. And if you're looking at one part of the IOU and not others, you make a really big issue with it. And it could cause a big problem for you because your returns won't equal what you think they are. Right. And that's where I think people fault, is they kind of make an offer that the seller will accept, but at the flip side, it doesn't work in their returns when they run the final numbers.
Yeah. Sorry with my video here. I'm just trying to do some things, shut down some other windows or something, get this moving a little bit better.
Friday afternoon, I think our computer's getting tired. So when we look at these things, we look at the fact that these assets are performing. What numbers go into are things like, what is the interest rate? Because that determines what kind of return we're going to get, because the P&I is based off that number and the UPB. So if that rate's a 2 or 3, it makes it extremely difficult for us to make an offer on it and get it up to a 10 yield because of that problem. But however, there are times where performing asset, you can bid as a performing asset.
Right. And a lot of that has to do with that interest rate. And so if it's a 3% interest rate, that's going to be a very tough one for me to bid on, just because I'm going to have to discount it a large amount for me to be able to get the return that I'm looking for, versus something that's written at like an 8, 9, 10% interest rate.
Is that easier. Rate that comes in is the gross return of what that asset is going to interest is going to kick out. So the fact that if it's an 8%, it's kicking out an 8% return every year, right? When if it's a 3%, it's kicking at 3%. So to get that 3% up to an 8, you got to discount so much that it drives that 3 up higher, because you're into it for X dollar. A $100,000 note at 3% kicks out 3% a year. Where to get it up to an 8, you got to buy that $100,000 note for such a discount using your financial calculator to get to a point where you're paying 10, 12, 15 a year, because you're not buying it at 100% of that value.
Right. And the argument can easily be made that, well, it's a 30-year amortization, but they're probably going to pay off in a shorter amount of time than that. That's probably true.
Yes.
We don't know. So we have to go with what we have today. That's the only information that we can work off of. I can't guess that maybe 5 years or 7 years from now, they're going to refinance or sell the house or something. I can't hypothecate and hope to make money at some time in the future. It has to be based on today's numbers.
Absolutely. And I think for most people, they don't understand that, and math is difficult, and the financial part of it is extremely difficult. But if you originate notes, or if you understand how notes are originated, the numbers that go into that origination is the exact same numbers we're working with, because yield is interest rate, right? Exactly. And if you're looking for a certain return a year, that's the number you're going to play with. And that performing asset, if it continues to perform to maturity date, you're going to get that return every year until the maturity date. And that's one of the reasons why we don't target percentage of UPB, because that actually doesn't work for you, because it doesn't calculate the interest rate, which also drives in your returns.
And that's the thing. It could work,
You could.
if the interest rate happens to be at the right amount, but
Yeah.
if it's not, then you've just shot yourself in the foot and you've made a terrible investment. So
if you see a loan written at a 13, 14, which we're probably going to start seeing in the seller finance world, according to Max,
yeah,
would you bid that 100% of UPB?
honestly, probably not. I'm probably still going to discount it at least some, because just because of the risk that I'm taking on. You know, and again, there's other factors that go into it. How much equity is in there? What's the property value? Where is it located? What kind of contract is coming through? Okay.
Yeah, my internet, I think, buffered for a second, so I apologize for everyone. It has been a crazy Friday.
Yeah,
Around some
I don't
storms roll
know.
in. Yeah.
Something's funky here.
I know. So on the flip side, though, the one time you can truly go off a performing asset, performing note at any one time, is if you're buying a partial, right? Why is that? You have a beginning and set date. If it goes non-performing, you really don't want to worry about it. So you're actually can bid based on yield, because you have a set start date and maturity date, and that bond expires. You're probably not going to sell it before that.